is the OPEC meet the most decisive factor, or would you reckon that irrespective of whatever decision can realistically be taken there, a really sharp up move is out of the window right now?
I don't think you're going to see a massive bounce of 5 or 10% to the upside quickly. I just don't think those parts of the equation are really there. There's so much momentum to the downside. I think this has really been a 7-week trade. Bears have been all over it. It's been enormous as far as downdraft. And if you've got to see what happens as the G20, because that's going to be the entree to the main course on December the 6th. There is no doubt as far as consumption. We're through 100 million barrels a day. Last Thursday I went over to Paris and I was in the International Energy Agency. And they're even their forecasts are, trimming those back as far as 2019. So what the global demand picture is. So I think that there's a wash with oil. And we're very conscious of that. And we've got a very bullish president wanting to be bearish on price. And I tell you what, he's certainly delivered, and he's taken the back step as far as Saudi and Russia. Everyone's having a little bit of a wake-up call.
Yeah. What do you make out of, the divergent opinions of the IEA as well as the OPEC? So while we've seen crude supplies and stockpiles on the rise, IEA believes that this is good because it's a sort of an insurance, while OPEC, on the other hand, said that they're going to probably look at, cutting down on their supplies, which in anticipation of, the shortfall because of the Iranian sanctions, they had upped a bit. So now they're planning to pull that back. So two divergent opinions coming in.
Absolutely. Look, the other side, of course, is also that OPEC is not the big producer. They certainly produce, a third to 40% of the global demand. But there are a lot of other producers, and when you see of what the US has done, Canadian oil sands and so on, all of these markets are very, very strong as far as the production side. So I think it's just going to be a very interesting couple of weeks. I think there'll be some whipsawing as far as price, but the big picture is going to be what happens as far as Trump and President Xi with the G20. Do they resolve that matter, or is it full-on trade wars going forward? And that's really going to have some sort of overhang to the December 6th meeting.
So paint like a scenario for us in terms of the impact on crude oil if things don't go down the way that they're anticipated to go.
I think you're going to see another 10% come off the market very quickly. I wouldn't be surprised to see a 57, 56 handle as far as Brent. WTI's got the potential to be a 47. Have a look at the downdrafts. Have a look at what's happened over there.
Do you think OPEC will let that price be?
I wouldn't be surprised if you hit a 48, 47, 50 by December the 4th, leading into the meeting. I think you'll see some whipsawing then, and it's not uncommon. You go to the meeting and then there's the debrief at 5 o'clock where they present to all the analysts, and you guys are there, and the media, the global media is there in that arena. And then you see normally price volatility, and you'll see a whipsaw of probably 5 or 6% to the upside. I'd say that's how it'll play. Then it'll settle down, normally about 48 to 72 hours. It's going to be a Thursday meeting, so you'll see trade in New York that evening. Then you'll see the Friday. I think it'll be fairly wild gyrations on the market.
Interesting. Peter, I know you kind of briefly touched upon that, but how much of this is fundamental rebalancing, and how much of this downdraft, as we call it right now, is also sentimental and trading led? I mean, my question is, realistically, over a 12-month period, what's an ideal average based on fundamentals that you reckon crude prices could see, NYMEX or Brent?
Well, I think first off, there's a downdraft, and that's been very much led from the hedge funds and certainly the big traders. Retailers across it as well, and everyone's short. And you've had a very strong US dollar. So momentum has really driven it really softer. If you're looking at a long-term projection, I think we're going to hold these sort of numbers. Unless you see something as far as geopolitics, or you see a war, or you see something, because we're really entering a new framework. You've got a president that's certainly saying, do we need 3 rate rises next year? And there's going to be pressure there. But let's just see what happens as far as next month. And if Jerome Powell, or the Fed chair, only has 2 rate rises, then everyone's going to weigh in on that and saying, well, maybe it's not as robust as what we think. There are many commentators saying that we're at the full end of the cycle. We're only seeing downtimes from here. Have a look at the Chinese stock market. Have a look at Bitcoin. Have a look at crude. All of these markets, 18 have been an incredibly volatile year, and I think that that's going to carry forward into 19. I think we're going to see a bit of a turn in those the major economies. The Eurozone, I was in London last week, try and figure out Brexit. What's happening there? I mean, no one really can understand the framework and how that's going to play out.
Typically, equity markets tend to follow the credit markets.
Sure.
Commodities do what they do.
Yep.
This time around, we've had spreads in the US inch up quite dramatically.
Yep.
And maybe they need to come off, or the rates kind of don't need to go up as fast as people anticipate.
Exactly.
Do you reckon equity markets by themselves, I know you look at equity markets too,
Sure.
per se. Do you think equity markets per se could have a much slower next couple of quarters? And could there be further pullbacks? The S&P 500 valuation, by the way, is lower than the 10-year average.
Exactly. Well, have a look at, you look at the big, the tech stocks. See what's come off in those over the last 6 to 8 weeks. It's been a washout. And this could be the start of that phase as far as, the majors, the Dow. Have a look at the S&P. October was a very, very volatile month. If you put your mind back a bit over a month, those huge swings, you used to see the Dow trade 500 and 600 points in a session. And it was down, and then all of a sudden it'd capture back up, and then it's down. People couldn't work it out. They were saying, well, and we've got a short memory on that because of the volatility, and crude's really taken the centre stage. But I think we could see a major return to equity market volatility come January, February. Let's just see how everything plays out over the next couple of weeks leading into Christmas. But yeah, I think volatility is going to be very much a part of the market in 19.
All right, and S&P, since its September highs, has already given up about 10% in a matter of, a few weeks.
Exactly.
And so has crude. I mean, for people calling $100 to the barrel on crude, what changed so substantially for the crude to come off in a matter? So, we just did have a chart where we showed the rise of crude. It took about 150 odd days for crude to reach $86 to the barrel.
Sure.
Brent. And it took just 34 days to 35 days for it to come off where it is right now. So for the people who called 100,
yeah,
they're eating their words.
Well, they are now, but traders can move very quickly. You can go from a bullish situation or a bullish trade to a bearish trade within seconds, and price reversals. The one thing that's probably a little bit strange that most people didn't read into it was President Trump's mantra. And he had midterms coming up. He didn't want a strong, still doesn't want a strong US dollar, and he didn't want high crude prices. And with those midterms, he wanted to really take very much a strong attack on OPEC and say, right, we want to see softer prices. He had some leverage on that as far as the Khashoggi issue, and he's still got leverage at the moment. And he's got that, another point of leverage is he's got huge production coming out of the States. So, they're all vying for first place at the moment. Russia, Saudis and America as far as what sort of numbers they'll hit.
So it has the political undertone to it.
Well, exactly. And so there's some geopolitical. Then you've got the Iranian sanctions. What's really the wash on that? You've got those 8 countries or jurisdictions. It doesn't seem like much of a sanction compared to what I used to see sanctions 10 years ago or 20 years ago, and it'd really cripple the nation. I don't really see that happening in Iran at the present. So all of those need to be considered. But I think one of the first point is certainly President Trump's mantra, and that really had a great effect to the, the bearish side of the market.
Okay, Peter, we'll leave it at that. Thanks so much for taking the time out and being with us today.
Thank you.
Well, we'll see you in or around the OPEC meeting as well.
Yes, absolutely.
Great. Cheers.
Thank you.